Hey, everybody. Welcome back to the Circle. This is Annette Hines, and this is my monthly series on planning and three not so easy steps. So tonight we are scheduled to talk about trustee selection. What does a trustee do? What does their job look like? And that will help you figure out who's the right person for this job, what your options are for trustee. And then let's talk about trust protectors. What are they? What do they do? Do I need one or not? And we are talking about this primarily for special needs trusts or for trusts where a disabled person is the beneficiary. So this is going to assume just a little bit of knowledge about trusts, a little bit, and that a trust has a trustee that manages it. So let's get started. So what does a trustee do of any trust? A trust is an instrument that is like a little company, and it holds assets, and it needs someone to be the CEO and manage it. And by the way, I am really sorry about my nasally voice. I came back from vacation with a cold. The whole family did, of course. That's what happens when you're on planes, trains, and automobiles and boats. Um, so a trustee is it is that CEO role of this trust instrument, this little company. And first and foremost, a trustee of any trust has three primary duties. So this is what I want you to remember. The first thing that they do is gather all the assets, all of the things that a trust will own. That can be investments, that can be retirement accounts, that can be a um, a home, real estate, a business. Trust can pretty much own anything. It can own that Monet painting. It can own baseball card collections. It can own anything, really. And the trustee is acting as the legal owner of those assets. The trust, although it'll be titled in the name of the trust, someone has to be able to manage those assets and manipulate those assets and watch over those assets for the benefit of somebody, the beneficiary. So that's the primary thing. They grab all those assets, they marshal them, and they take title to them. The second thing is they have to take those assets and then they need to manage them. So under that management, you're talking about really keeping the books and records of this organization, of this trust. We are, basically talking about the ins and outs. What is the income coming in? What are the checks going out? Keeping a basic checkbook, watching the growth of the assets, managing the investments. Now, oftentimes you're going to hire somebody to help you do that. I know an awful lot about investments, but that's still not my area of expertise. So as I act as trustee, I hire professionals at Merrill Lynch or another institution like that to manage the wealth that's in these trusts. And they advise me and we make decisions together. And on top of that, then the trustee is going to need to, under this category of managing the trust assets, keep the books and records and prepare and file a tax return every year for the trust. Most special needs trusts are going to need to file a tax return. The tax elections are the responsibility of the trustee, whether that's asking that question of, is this a qualified disability trust, which we'll talk about in another session? What kind of tax implications do we have for required minimum distributions for any inherited IRAs or retirement plans inside that trust, and so forth? Again, this is an area where the trustee is going to have full authority to hire professionals like a CPA to help with preparing those taxes. Ultimately, the trustee is responsible for managing and oversight of any professionals that it hires. So it's important to know that even if you know zero about filing a tax return for a trust, You still need to learn, you need to gather the advice, and you ultimately need to make the decision about filing this way or that way. You cannot solely rely on the advice of any counsel that you're getting. That scares a lot of people who aren't in the business of being trustee, and I understand that. It should really be important that you take this seriously and that you are prepared for the job. So, I love that. The third thing, and this is where we start getting into the really important roles that we as parents or siblings or even a disabled individual themselves really care about the job and the role of the trustee. And that is making distributions to or for the benefit of a beneficiary. How do those decisions get made? What kind of person, is going to be good at making those decisions? What kind of skills do they need? And they have to follow the trust document. Not every trust document is cookie cutter. It's quite possible that one trust will have restrictions that another trust does not. And a layperson may not understand and be able to read that distribution clause and really get there and understand and get it. Excuse me. So looking at what's in the four corners of the document itself is the first thing that you need to do when you become a trustee or when you're even considering becoming a trustee. And maybe you need to have an attorney explain to you what the distribution clause says. For example, there are two things that you're going to commonly see in a distribution clause for a special needs trust, whether it's a third-party trust, a supplemental needs trust, we usually call it, or a first-party trust, generally known as a D4A trust. And that is going to be something called sole and absolute discretion. The trustee has sole and absolute discretion to make decisions. They don't have a reasonableness standard. There's no test. It gives the trustee just unfettered discretion about whether to say yes or no to a distribution. That clause, sole and absolute discretion, is what makes that trust a non-countable asset for public benefits purposes. One of the goals of a special needs trust is to be able to save for a person with a disability and still allow them to receive very needed public benefits, whether that's Medicaid, whether that's a housing benefit, whether that is whatever that benefit is. We also have clauses that are very common that will tell the trustee inside the four corners of that document to disregard the interests of the remaindermen. Those are the beneficiaries who come after your primary beneficiary. And those terms are stated very different ways. It might say, hey, this person is your primary beneficiary, pay attention to them first, or until the primary beneficiary has passed away, then you don't pay attention to the remaindermen, whatever the case may be. There may even be a trust that has multiple beneficiaries, and it may give you a hierarchy of, this is your primary beneficiary and you should skew distributions towards them. So it's really important that you look at those distribution clauses and understand what they're communicating to you, what they're saying to you as the trustee. This is your template, your organizational manual by which you need to act. So the other thing is that you have to act as trustee in accordance with state law. So you're not going to have a trust document that flies in the face of state law. For example, there's often, like in Massachusetts and most states, most jurisdictions, there's something that is akin to a duty of loyalty to the beneficiary under state law. And it's going to be said in different ways using different language, but that's basically what it is. You may have sole and absolute discretion to make decisions, and it may not be a reasonableness test, but you still have a duty to your beneficiary. Let me give you an example of what that means. In my work over the last almost 30 years, I hate to say that because it dates me so much, but it's true. I have had occasion to run into a trust where the trustee hasn't had any contact with the beneficiary for a couple of years. You can't do a good job and fulfill your role as trustee if you don't communicate with your beneficiary. That's not as uncommon as you would hope it would be. It can be particularly difficult for family member trustees sometimes because the relationship amongst the family members might not be good. It might have evolved to something that's toxic for people. It's hard to know. So, duty of loyalty is very important. You do have to know where your beneficiary is. You do have to attempt to communicate with them and attempt to use the trust to benefit them. The third thing about this part of the law or this part of trust management is that you have to have that good communication with the beneficiary. So above and beyond what I said about just, knowing where your beneficiary is, it's your job to determine what the distributions need to be or could be, and to make sure that there is a process for meeting the needs of your beneficiary. Now, that leads us into the fourth thing. So those three things are applicable to any trust with any beneficiary. That's the role of a trustee. But when it comes to special needs trusts, you actually really have a fourth thing. And this is the thing that can really throw people off. You need to understand every benefit, every distribution that leaves your hands, that leaves the trust. You need to know as best as you can what that outcome will be once the beneficiary receives the benefit of that distribution. So here's an example that I often give to clarify this. Let's say that your person has a cell phone. Most of our people do, and their bill's $100 a month. You need to understand the difference between paying that bill directly, which is not income under any public benefits rules, or giving $100 cash to your beneficiary and letting them pay the bill themselves. And depending on the type of public benefit, whether it's housing, whether it's Medicaid, whether it's specialized Medicaid programs, whether it's a state agency program, whether it's Social Security, what kind of Social Security, that distribution of cash is going to be treated differently and maybe income at some times for some benefits and not income for others. And you need to understand as best you can what that outcome will be if you handed out $100 rather than paying that bill directly to the phone company, to Verizon, to Comcast, whoever it is. And that's where a lot of people really get turned around and say, but how am I going to know? My brother, my sister, my cousin, they don't tell me the truth. They won't give me all that information. Well, then you have to make decisions based on what you don't know. And you need to make assumptions that any distribution is going to have an impact of income, etc., and make your distributions accordingly. So that is the number 4 duties and tasks of a special needs trustee, and what makes their job a lot harder, because you absolutely can have some liability for impacting public benefits even when you don't know about them. That is essentially the role of a special needs trustee, is to make sure that the goals of the trust and the goals of the beneficiary are met. And most of the time, that means accessing public benefits wherever possible, as well as enhancing and supplementing a person's life. Does that mean that you have a responsibility to help them keep their benefits, apply for benefits, report this trust to the benefits agencies? No, none of that. But you do need to understand the impact of your distributions to the best that you can. So that's the role of a special needs trustee. And now, as you're thinking about that, you start wondering and questioning, okay, so what type of person or what type of organization will make the best trustee for my beneficiary that I'm planning for, or for myself if I am the beneficiary? There are, sort of two camps that people fall in. The first camp is, I really want Uncle Bob or Cousin Fred or, sweet sister Jane, because they are really good with money. They've done so well investing for themselves. And, so and so is a CPA, and I know they'll do a great job. So those are important things for sure. But you really want to consider the fact that you can hire that expertise. You don't need to have a trustee necessarily that can do all of those things. The second camp of people are really concerned about having someone who knows their beneficiary, who's close to them, lives close to them, knows them very well. And I completely understand and get that aspect. That tends to be a close family member, sometimes a close friend of the family. And that can be a really great choice. Some of you will really know that that person is going to be loyal and they're going to get the advice and counsel that they need to do a good job as a trustee. And that's great. You don't have to look any further. So your options as you're thinking about selecting a trustee are going to be those friends and family members, those individuals who don't necessarily have expertise as a trustee. Maybe they do have some special skills, and that's wonderful. That maybe they have a great personal relationship with the beneficiary, and that's wonderful. Your next tier is going to be professionals. So your lawyers, your CPAs, sometimes your financial advisors, although most financial advisors who have certain licensure are not going to be able to act as trustee, but certainly if you have that great relationship with your wealth manager, then you certainly want to have that conversation with them, and perhaps they can make a recommendation to you. Those are individuals, and the pros and cons of selecting an individual, like I'm going to name my lawyer, is that they are just one person. And just like friends and family, at some point they may become too old or, too just, moved on to a different phase of their life and not want to do this job anymore. So they may not be there for a long period of time. And individuals don't go on forever. We all get sick, we all get older, we all pass at some point. So the pro is that sometimes, not always, they can be less expensive, although most of the time I find that that's not true. But they may have a personal relationship with you and your family. So they may know a lot more about your goals for your child or for yourself if this is your trust. Having that close relationship can really make you feel peaceful and at ease about your decisions. That one-to-one that your beneficiary can get with an individual trustee that happens to be a professional can be also very beneficial, right? They can get to know your person better. Your third option are banks and trust companies and other professional organizations that act, fiduciary organizations that act as trustee. We have a fiduciary organization. So the pros and cons. Cons, of course, there's a fee associated with that once the trust is funded and the trustee, the institutional trustee, takes over. Another con can be, depending on the size of the bank that you pick, they have certain rules and restrictions about how they manage trusts, even special needs trusts. And so here's an example. We have a beneficiary who has another trust with a large New York bank. And once you hit a certain dollar amount, that distribution request has to go to a trust committee. And those committees don't meet often. They meet maybe a couple times a month, if that. So you're waiting weeks to get an answer sometimes on an expenditure. And then you don't have that personal relationship with your trustee or your banker. That's not all firms. Ours doesn't work that way, but you really want to check out the size and the process that they have. But there are some pros also. And depending on that institutional trustee, it might be quite expensive, especially if your trust is small and if they charge extra for a lot of things. So you want to get that fee schedule and really understand what your fees are going to be when the time comes. Overall, they can be a really good deal because they take care of a lot of things that a personal or individual trustee may struggle with. It may actually cost more for the individual trustee to have counsel on hand, a CPA, a special needs attorney, other advisors. It may end up actually costing more overall to get that advice than it would just to have that professional organization or that professional be the trustee. But on the pro side, as I just mentioned, it can be cost effective, but an organization carries on after the trustee, your trust person, the person who is like your case manager, let's call it. When they leave, whether they retire, move on to another organization, what have you, the trust goes on, the trust company goes on, and you don't need to change and move the trust around to other places. So that continuity can be quite reassuring and quite beneficial. They usually have good process in place that can deal with a lot of situations, etc. So those are your options for selecting a trustee. Of course, a lot more goes into that, and I encourage you to check out our resources, our courses. We have a whole course on trust administration for the non-professional trustee. And I encourage people who are just drafting their plans to go through that course, because then you really get a flavor and a feel for what your trustee will need to accomplish every year in their trust. Now, one of the things that we'll often recommend, and this is not going to suit everybody, is that we have some kind of a professional trustee or an institutional trustee. But to overcome that concern or fear that you won't have somebody that knows your person well, you can have a close family member or friend be a trust protector. What does a trust protector do? Well, certainly it's whatever is written into the trust document. There's not a law that says a trust protector is X. It's a role that is created. It's almost an advisory role inside the trust document, and will have different responsibilities depending on what you would like. For example, most often a trust protector has the right to, but is not required to, review annual accountings to look at expenditures, review statements, investment statements, to make sure things are going appropriately, and certainly act as advocate for your beneficiary and helping them access distributions, especially if they are vulnerable and are not able to always speak for themselves. Sometimes that trust protector will be the guardian. Sometimes there isn't a guardian, but these are complex matters and require a little bit more support than the average daily living task. A trust protector can often also remove a trustee and replace them with another institutional trustee. And we recommend having that in your trust so that if there's conflict, nobody has to go to court. A trustee can be removed if it's not a good fit anymore and replaced with another trustee that you've interviewed and found to be helpful and good. So that's what a trust protector does. We write those into at least half of our trusts and really think that it can be a good idea depending on your situation and your goals. So I'm going to stop this part of the presentation now, and I'm going to jump to questions. And the recording is going to stop, and we will be posting this very soon in this section, the special needs advocacy and planning section. Thank you.